Good afternoon, grade 12s. I'm Mrs. Wessels from Bloemfontein. Today I'm going to do a lesson on manufacturing and stock valuation. Two chapters that I really love to do, and it's also not difficult, it's easy to understand. I really hope that you will also enjoy it and that you learn something, and that you make sure in any exam that you do your stock and your manufacturing properly. Thank you very much. I really hope that you enjoy the lesson with me. The first question is question 5.2 from the Free State September 2016 question paper. The school's choice factory shop. Marion Toole is the owner of this business, which produces and sells school uniforms. The information below relates to pairs of trousers that the factory is producing, among other items of school uniform. They only ask in this question the factory overheads note to calculate the direct material and the labor. I am going to do the production cost statement quickly with you. I don't have an answering paper for it, but I will quickly make one. And then there's a question mark for finished goods, but we cannot do that one today because in this specific question they don't give us sales. They don't give us cost of sales. So we cannot go there, but we can do the rest. We can do. Okay, so the information that we are going to use there is whatever we need. I think we are going to start with the raw material stock. That one we will use when we calculate direct material cost. Remember, there's a note, there's a formal note. You can do a formal note, you can do whatever you want. I think I'm going to stick with that. So I will say opening stock for the direct material. Please make sure about your dates. This is the beginning of the year and this is the end of the year. Please make sure and don't get confused between the beginning and the end of the year. Opening stock for the raw material is 264,500 Rand. Let me just take it a little bit further. 264,500. That is our opening stock of the raw material. Then we will have net purchases. That is the note. I'm busy doing the note. And then there will be carriage on purchases or any other custom duty or anything like that. And then closing stock. The closing stock, remember, it's not necessary to do, you can only do calculations, and the closing stock is 221,000. And that one is in brackets. Work in progress, we are going to use in our production cost statement. I will come back later. And then finished goods, we're not going to use now. And then indirect material. Indirect material is our factory overheads. Indirect material. Start with a balance of 5,500 in the beginning of the year. Then we are going to buy more indirect material. Then we are going to say there was 11,000 left at the end of the year of our indirect material. Now we go to the information. We purchase raw materials for 111,0800. So I'm going to make a bracket 111,0800 there. That was purchases. We also purchase indirect materials, so that we are going to put on top 46,000. That is what we bought there. Carriage on the purchases of raw material. Every time that they say raw material, 43300 there. Maintenance, we will put maintenance in our factory overheads. Maintenance. What is factory overheads? Everything that has to do with the factory. Remember, there's 5. Can I quickly show you? There's 5 costs. We've got direct material. That is the one that we're busy calculating there. We've got direct labor. We're also going to calculate direct labor. Then we've got factory overheads. Those two form prime cost. Prime cost plus factory overheads give you total cost of production. Total cost of production. So you've got 3 there. Then you've got administration cost, and we've got sales and distribution cost. That we also need, but that is not part of the factory to produce the product. So these two are the main two because they give you prime cost. Prime cost is not enough. You also need factory overheads that give you total cost of production. So in your factory, you work with those 3. And then on the sideline, you've got the administration, the people in the office doing your orders, doing all your accounts, everything there. And then sales and distribution, the people that get rid of the product that we did. They advertise, there is the marketer, the salary of the marketer, the depreciation on the vehicles, all those things is your sales and distribution costs. Okay, so that is basically what it is about. Maintenance is a factory overhead. Advertising is not. Advertising is a sales and distribution. Rent expense will be factory overhead because we rent the factory. Then we've got depreciation there. Depreciation on the factory equipment, and then the depreciation on the delivery equipment or the delivery vehicles is sales and distribution again. Maintenance, I'm going to start with a bracket of 45,000 for the maintenance, 45,000. Rent expense 129,408, 129,408, and depreciation start with 37,500. Remember only the factory equipment. Additional information. The bookkeeper forgot to record an invoice of 200,000 on which a trade discount of 30% was received for raw material purchased. It's more raw material that we bought, but it is 200,000 times 70%, because I already subtract the 30%, that gives us 140,000. Trade discount we never show anywhere, so that gives us another 140,000 of purchases of raw material. Purchases of raw material. 3/4 of the indirect material were used in the factory. So your answer there times 3/4. 3/4 of your total answer, not the 46,000. Of all the indirect material bought or left from last year. Remember the 5,500 was left from last year. This was what we bought this year. And this is left at the end of this year. So you take all of them and you times it by 3/4. 3/4 because they say that was used in the factory. Salaries and wages include the following. Salary for the factory foreman. So there is a salary for the factory foreman. And he received 391,680. 391,680. Salaries to the administration staff. No, that will go to administration, and they don't ask us to do that, so that one we ignore. Earnings by the factory workers are reflected in the following totals from the wages journals. Direct labor equals to factory workers. It equals to factory workers. Okay, now remember there's gross wages, if you remember from grade 10, minus deductions equals to net wages. And then from the sideline, we've got the employer's contribution. Okay. So the question is, what are we going to show? We show the gross wage. You show the gross wage. wage because that is what it costs the business. And then you show the employee's contribution because that's also an expense. These are the two expenses according to wages for the business. But now we don't have the gross, we only have the net. So you say net wage plus deductions will give you the gross wages. And that is what we are looking for. So we say 735,600 plus, they gave us the total there, 203,700. That gives us 735,600 plus 203,700. That gives us 939,300. 939,300. And then we plus the deductions, and the deductions was 55,800. Plus 55,800, and that gives us 995,100. 995,100. That was the direct labor. Contribution regard as part of factory wage cost. We already showed that because we add the deductions. We add the contributions. We add the deductions as well, but because we don't have the gross wage, but at the end of the day, it's the gross wages and the contributions. These are the expenses for the business. For indirect wages, we also have indirect wages in our factory. There we've got 5 casual workers clean the factory at 45 Rand an hour. They each work 129 hours of normal time. 5 of them, 45 Rand an hour, they work for 192 hours normal time. And then 2 of them work 40 hours overtime with a normal rate plus 50. So that gives us 2. If you take the 45 Rand times 1,5, because that is the rate, 67.50. So they work for 67.50 Rand an hour, and they work 40 hours overtime. That is our wages there. I don't do any calculations now. I will do the calculations later. The maintenance account was debited in error with a payment for telephone 10,000. Take away the telephone. And then they mentioned that 80% of the maintenance relates to the factory. Factory overheads. We are busy with factory overheads. Rent expense includes rent for March. Rent was increased by 768 per month from the 1st of October. Oh, this is a real adjustment. Let's see, the rent expense was 129,408. Okay. That was the total, and that was for 13 months. But there was an increase, so we cannot just say divided by 13. Why did I say 13? Because it included the rent for March. Rent was increased by 768 minus 768 times how many months? October, November, December, January, February, and March. Okay, times 6 months. That gives us 129,408 minus 768 times 6 months, and that gives us 124,800. 124,800. Now we can say divided by 13. That gives us 9,600 Rand per month. Then we add the 768, because the month that we must subtract was after the increase, plus 768. That gives us 10368. 10368. That we are going to minus from the rent expense, minus 10368, and then they say on the top of that they say, okay, let's quickly revise. March 2016, if you go there, you see that your year end was there, calculate the following on the 29th of February. So March 2016 was the 13th month. We cannot divide it because there was an increase. First, we take away the increase for the 6 months. Then we divide it by 13. Then we've got per month. Then we add the 768 for that extra month that we must take away. And that's why we minus the 10368 there. Then they say rent is proportionally allocated to the various departments according to floor space. So the factory will use 600 of the 800. 600 of the 800 square meters. There's our calculations. Okay, we are done with the information there, so we can quickly do our calculations to see what we've got there. Indirect material. 5,500 was left from last year. We bought 46,000. 11,000 was left at the end of this year. Only 3/4 or 70% was used in the factory. 30375. 30375. Maintenance. Take away the telephone. The telephone was not part of maintenance. 80% was allocated to the factory. That gives us 28,000 rand for maintenance. Rent expense. Minus that March 129,408. Minus that 10368 from March, which was not part of this year. It was prepaid expense. It's a prepaid expense. It's a prepaid expense. Then times 600 of the 800 square meters, or times 6 divided by 8 gives you 6 of the 8. Let me quickly go back there. Was it 6 of the 10? 6 of the 10, 6 of the 1,000, because there's 250 plus 150, so it was 600 of the 1,000 square meters. Sorry, please concentrate, don't make mistakes like that. I'm going to do it again. I'm going to say 129,408 minus the prepaid expense of 10368 times 6 of the 10, or times 600 of the 1,000 square meters. That gives you 71424. Depreciation 37500 on the factory equipment. The salary of the foreman 391,800. The salary of the foreman was 680. And then 5 workers, 45 rand, 192 hours. That gives you 43,200. That was normal time. 2 workers work at 67 rand 50 for 40 hours overtime. 5,400 plus the 4,3,200 gives us 48,600. 48,600, and there is our total factory overheads. 30,375 plus 28,000. Plus 71424 plus 37,500 plus 391,680 plus 48,600, and that gives us 607,579. 607,579 total factory overheads for this year. We go to the direct material stock. We are not done there. Our purchases 111,0800. Plus the 140,000 gives us 125,000,800 plus the opening balance of 264,500 plus the carriage of 43,300 minus the 221,000. That gives us 1,337,600 rand, and that is our direct material. To do a production cost statement, it was not asked here. I'm going to quickly do a production cost statement. Production cost statement. Sometimes they start with prime cost. Sometimes they start with direct material and direct labor, doesn't matter. You've got your direct material cost. You've got your direct labor cost. And we take it from our information. Direct material was 1,337,600. The direct labor was 995,100. Normally this is in a block. I've got that answer still on my calculator, plus 995,100, and that gives me 2,332,700. 2,332,700 for prime cost. Then we say factory overheads. That was 607,579. Then we've got total cost of production. Total cost of production, so we add plus 607,579. That gives us 2940279. Total cost of production. Then we say work in progress. Beginning of the year. Then we have an answer there. Then we say work in progress. End of the year. So we add that one, we subtract that one. And then we've got our total, what is the answer there? Cost of, there's a few, it's a cost of production. Now remember, it differs from cost of sales. That is the cost price. This is the cost price of the goods produced. It can have a few names there. Okay, so we must quickly go back to our information for the work in progress beginning and the end of the year. And it was given there, the work in progress in the beginning of the year was 123,410, 123,410. At the end of the year, it was 345,800, 345,800. What is this? What is this? Unfinished goods standing around in the factory at the beginning of the year. What is that one? Unfinished goods. Unfinished goods standing around at the end of the year. That's why we call them work in progress. They are still in the progress of making them. Plus 123. 410 gives us 30,63689. 689, and then we minus 345,800. And that gives us 2,717,889. 889, and then that will go to the finished goods, because out of your factory, this is your factory. This production cost statement is whatever happens in your factory. What is in your factory? Direct material, direct labor, factory overheads. That gives you prime, that gives you total. Then we say, okay, there was unfinished goods standing around in the beginning of the year. That we add because that is finished goods now. We finish those goods. Then we say minus the unfinished goods at the end of the year, and that will go to your finished goods, and your finished goods account is basically your shop or your showroom, from where you sell the products. So it goes from your factory to your shop or your showroom. So that was the question on manufacturing that I've got here. The next one is also on manufacturing, but it's more calculations. You know that they always ask a small question on manufacturing with a break-even point and all those things. So let's quickly go to that question. That one comes from the 2006 question paper that I found this question. The business is owned by Gloria Smith. She makes and sells dresses. The financial year ends again on the 29th of February 2016. Concerned about the wastage of direct material, calculate the number of meters of material that was wasted. The numbers of meters of material that was wasted. So we are going to work with meters of material, but the thing that we must see there is that they give us their information on this side. And they say that 2.5 meters of fabric is used for one dress, for each dress. 2.5 meters of fabric is used for each dress. We must read that, otherwise we will not be able to do that calculation. Okay. Look at the opening stock of the meters of fabric purchases, then the raw material issued to the factory, and then the closing stock there. The closing stock there. And I just want to see total number of units produced and sold during 2016 is 4,500 there. 4,500 there. There's no information on that side. No, there's only questions there, so we only work with the information on this side. Okay. We produced 4,500 dresses, 4,500 dresses. We used 2.5 meters to make one dress. So that gives us 4,500 times 2.5. That gives us 11250 meters of material that we use for the dresses, for the 4,500 dresses. If you go to this information there, to the meters of fabric, we say opening stock plus purchases minus the one that we issued to the factory. So that gives us 525 meters of material, plus we bought 12,415, and we use not issued, supposed to be issued 11250. So that means that 525 plus 12,450 minus 11,250, then we were supposed to have 1275 meters as a closing stock. Supposed to, but we don't have that. So then we say 1725 minus 1475. Oh, that's a lot of material. Minus 1475, and that is 250 meters. 250 meters of material that was missing or wasted. Okay. The next question say that Gloria feels that the wastage is significant. Give a calculation to support her opinion. You can say, I will say, the first thing that I think about is 250 meters divided by 2.5 meters per dress gives me 100 dresses. Wasted. Material for 100 dresses was wasted. Some people will say, okay, the 100 dresses on the 4,500 that we made give us 100 divided by 4,500 times 100. So that is a 2.2% wastage. 2.2% wastage, because what is the meaning of 100 dresses? That is a calculation there. You can also say that 250, that is one calculation. You can also say that 250 was wasted on the 11,250 that was issued. Okay, that was, not that was issued. that was made, it will give us the same calculation there because it's the same things. 250 was wasted. Then remember, there we work with the dresses. There we work with dresses. Now we work with material. So 250 meters of material was wasted on the 11250 that was supposed to be, and that also gives you 2.2%. 2.2% wasted. Give two possible reasons for this wastage. In each case, give advice to prevent this from happening in the future. There is the memo. Unskilled workers, they don't know how to cut the material. Maybe there's poor quality of material, so you cannot use all the material that you've got in front of you. There's offcuts, big pieces of material that you must throw away. Lack of supervision. Nobody is watching them. Nobody's do some supervision there. Offcuts. Yeah, on offcuts, I would say train the workers to know what to do. Change suppliers so that you don't have that poor quality of material. Use offcuts for something else, or increase monitoring and supervision. Train your supervisor. The next question is calculate the break-even point. Remember to calculate the break-even point. We need to have the difference between fixed cost and variable costs, and that was given to us. If they don't give it to you, you must know what to do. Okay, fixed costs. If you can quickly just have a quick revision there. Fixed cost is cost that didn't vary according to the amount of goods that you make. It means it's the rent that you paid. It is the salary that you paid to the foreman. Okay, the rent of the factory. So it is the salary that you pay to the administration lady. I'm a teacher. I don't receive my salary according to something else. They give me my salary, so I'm a fixed cost for the department. Okay, so for fixed costs, we talk about factory overheads. And we talk about administration costs, admin costs. I know that included in your factory overheads is also indirect material, but for the school syllabus, fixed cost is our factory overheads and our administration cost. Variable. Change according to numbers produced. Okay, I'm talking about direct material. If you make one dress, you need 2.55 meters. If you make two dresses, you need 5 meters, etc., etc. One zip for one dress, 2 zips for 2 dresses. Direct labor. Because most of the time we pay our labor according to what they do, how many they make, and then also sales and distribution. Because it costs you less to distribute 100 dresses than to distribute 1,000 dresses, for example. So there's our fixed and variable. This one is per unit. Okay, so to calculate the break-even point, we say fixed cost, big amount, divided by contribution per unit. Okay, the contribution equals to, that contribution equals to the selling price per unit minus the variable cost per unit. Meaning that if the selling price is 200 Rand and the variable cost is 120, it means that there's 80 Rand left. I didn't say it's profit. I say there's 80 Rand left to pay for the fixed cost. That's why we say contribution per unit. So how many, the question is how many 80 rands do we need to pay the fixed costs? That is the question. So that's why we divide the fixed cost by the 80 rand, and the answer will say that is the minimum. That is the minimum amount of goods that we are going to make, because we make no profit. We break even. We break even there. So after that, we are going to start making a profit. Okay, so we put the fixed cost on top, divided by the contribution per unit. That gives us, okay, let's see, where is our information? There's our fixed cost. The big amount is 900,000 rand. The contribution is the selling price per unit, 650, minus the variable cost per unit, 350. That gives us 900,000 divided by 300 rand, and that gives us, divided by 300 rand, that gives us 3,000 units to break even. 3,000 units to break even. Explain why the business should be satisfied with the number of units made during the current financial year. State 2 points there. There's the memo. They say that they are producing 1,500 units more than break even, because break even is 3,000, and they produced, you remember, they produced 4,500, so you can be very happy. They produced 1,500 more than break even. They produced 700 units more than last year. Let's quickly go back to the information that you will see there. You will see there from 3,200 to, from there, 3,600. No. They are producing 700 units more than last year. Number used producers, okay, 4,500, and no, where did they take that information from? They are producing 700 units more than last year. Don't look at that. 3,600, 4,500, 4,500 minus 3,600. Not 700, 900. 900 more than last year. They produced 900 more than last year, and the break-even point is 200 less than last year. So bring in last year's figures, but I prefer only the first one. Just say that they produce 1,500 units more than break-even. The direct material used to make the dresses is purchased locally at a cost of 150 per meter. Gloria is considered. Importing the fabric, it will cost 120. 120 rand per meter, all costs included. And they ask you, if she decides to import the fabric, what effect will it have on the production cost of a dress? And the answer there is that they say a dress costs you 150, it will cost you less, 75 rand less, because she just say that 120, okay, she said 150 minus 120 gives you a 30 rand there, so you score 30 rand, and then she said on the 2,5 meters times the 30 rand that you score, it's going to cost you 75 rand less on a dress. Say 2 other consequences if of importing the direct material. I want you to look at the memo there. Local producers will lose business, because now you buy from overseas. Not easy to get the stock on a short notice. Remember the shipping delays. Change in the exchange rate could affect the cost or the profit without notice. Now it's cheaper. Now it's cheaper, but it will not maybe stay cheaper forever. Whether she should decrease the selling price of the dresses or not, because it costs her less. She will lose clients because she cannot advertise support for local products. Increase in the import cost in the future and not easy to return poor quality material. They only ask you two. Think about when you import things, that will be the problems there. Okay, we are done with that question. And I've got another question here, the last one for today, and that is on stock valuation. I absolutely love stock valuation. Let's see what we've got there. It is from the Free State September 2016 question paper. Vestas and Traders, the business buys and sells generators. The business uses the periodic system. I always say to my learners, you highlight it immediately. The periodic system and the FIFO method. Sorry for that spelling mistake. The FIFO method to value stock. First in, first out. So now you know, the moment that you highlight those two things, you know exactly what they are, what you're going to do, how you're going to do the calculations, so that help you to put your mind to what you are going to do. Calculate the value of the following on the 30th of June. Okay, closing stock. Remember, we work with FIFO, so to calculate the closing stock, we are going to do it as follows. We look at our information there. We've got stock balances, we've got all the purchases, and we've got the sales and also the returns. FIFO, you say there's 80 left. That 80 there is left. Okay. Then you go to the latest batch that you bought, and you go back to the middle one there, the second latest, and you must have your 80 out of them, because first in, first out means that the old things are already sold. So we say 70 minus 5, because they mentioned that the returns was bought on the 18th of June. So we must minus the 5 from the June things. That gives us 65, and then you say then there's 15 of the second last batch. That one is times 2,900 Rand. That one is times 2,800 Rand. So that gives us 15 times 2,800 gives me 42,000. 65 times 2,900 gives me 188,500. Remember, why am I working with that? Because the 80 is the 15 there and the 65 after we return. Don't forget about the carriage. The carriage on purchases, we must add the carriage. You can also add the carriage there at the different amounts, but I'm just going to do it separately. 26030 was paid on carriage of a total of 190 items that we bought. So that gives us 26030 divided by 190. That gives us 137 per unit times the 80 that we have still in our business at the end of the month, 10960, and there's our total. The value of our stock is 42,000 plus 188,500 plus 10960, and that gives us 241,460. 241,460 is the value of the closing stock according to FIFO method. Cost of sales, periodic system, opening stock, plus purchases minus returns plus carriage on purchases. Show it, it counts 6 marks. Show what you do. Minus closing stock. Minus closing stock. Opening stock. The value of the opening stock, 138,000. 138,000. The value of the purchases was 512,000 minus the 5 at 2,900. 5 times 2,900, that gives us 14,500 minus 14,500, that gives us 512 minus 14,500, that gives us 497,500. 497,500. The total carriage was 26030, 26030, carriage on purchases. The closing stock came from there, 241,460. 241,460. That gives us 138,000 plus 497,500 plus the 26030 minus the 241,460, and that gives us 420,070. Okay. Then I put in 2 questions that was not originally asked. I asked you to calculate the gross profit, and I asked you to calculate the gross profit percentage on cost. So what you do there is you say gross profit equals to sales minus cost of sales. The sales was given to us. The sales was given in the information. The total sales there, sales for the period May and June, it was 563,200. 563,200 minus the cost of sales that you calculated there. That goes there, because then you will, if something is wrong, they will give you method marks. They will give you method marks. 563,200 minus 420,070, that gives us, oh no, I did something wrong. 563,200 minus 420,070, that gives us 143,130. That is our gross profit. And to calculate the gross profit percentage on cost, you put the profit on the cost. You put the profit on the cost, you times it by 100 for a percentage. So you put the profit on the cost. And we say divided by 420,070 times 100, and that gives us a 34% profit that this business is making. The owner suspect that generators had been stolen. Calculate the number of generators stolen. You just work with your units. You only work with your units. You say 60 opening stock plus 190 bought minus the 5 that we returned minus the 162 that we sold. Are you with me? Opening stock, purchases, returns, sales. That gives us 60 plus 190 minus 5 minus 162 gives us 83. Supposed to be left, there's only 80 left, so 3 was stolen. 3 was stolen. Give 2 points of advice on the stolen things. Give 2 points of advice. Count stock regularly. Count stock regularly, randomly, and check against the stock records. Order smaller quantities but more frequently. You cannot do that when you order from overseas, but if you order locally, you can do that. It's a very good idea to do. Improve physical security. For example, controls at the entrances, security cameras, and claim on your insurance policy. Okay, so there was 3 generators gone. Okay, now a typical way that they ask this. Now they say, after we did everything for the FIFO method, they say the owner, Mrs. Westhuizen, is considering changing to the weighted average cost method. Okay. Now we must calculate the value of the closing stock using the weighted average method and round the average price off to the nearest rand. Okay, to do that, you need a formula. Okay, we say opening stock plus purchases minus returns plus carriage on top, and we talk about value, so we talk about money on top. Then we divided it by opening stock plus purchases minus returns, and now we talk about units, amount of units. So we start with, for the weighted average method, we start with opening stock 138,000 plus the purchases was 512,000. I think you can remember that the returns was 14,500 and the carriage was 26030, and we divided it by the opening stock was 60. We bought 190 and we sent back 5. Please don't add another whatever for carriage, because that is not what you must do. To do the calculation, we say 138,000 plus 512,000 minus the returns of 14,500 plus the 26030. That gives us 661,530 divided by 60 plus 120 minus 5. That gives us 245. That gives us an average price. 661,530 divided by 245 gives us an average price of 2,700 Rand and 12 cents. But we are going to keep it on 2,700, and then we say times 80 because there was 80 left. And as we use the 80 there in the FIFO method, as we use the 80 there, because we calculate the value of the closing stock according to the FIFO method, now we say times 80 because we are again busy with the closing stock just according to the weighted average price. So times 80 Rand, times 80 units, clear your calculator. Clear your calculator, 2,700 times 80, and that gives us 216,000 Rand. There's 2 questions left, but before we go there, I want to quickly say something about the results that we can see here. FIFO method. The closing stock, the gross profit, and the closing stock, the cost of sales, and the gross profit. Weighted average. Okay, for the FIFO, I've got the information here. The closing stock was 241,460. 241,460 for the FIFO method. The cost of sales was 420,070, that one there, and the Gross profit on top was 143,130. 143,430. 130, sorry. Now for the weighted average, the closing stock is 216,000. We just calculated it there, 216,000. I can do the gross profit for that one, gross profit for weighted average. Now I must first do the cost of sales, sorry. Cost of sales, remember I'm still in the periodic system, so I'm just going to use the information there. Opening stock plus purchases minus returns. Are you with me? I'm using that information there. Plus the carriage. And now we minus the new 216,000 closing stock. And that gives us opening stock 138,000 plus 497,500. The purchases minus the returns plus 26030, the carriage minus 216,000 gives us a 445,530. Subtract that from your sales on top. There's your sales was 563,200. 563,200. That gives us a gross profit of 17670. Okay, if you look at the comparison there, this is typical what will happen in those two things. Why is that one bigger? Because your closing stock was valued at the highest prices. If you look at your information, it was 2,500, then 2,800, then 2,900. The opening stock was 2,300. Can you see how the prices increased? Every time that we bought generators, the price increased. The price increased the whole time. Okay, so that is why your closing stock has a bigger value, because you value the 80 that you've got left, you value at a bigger price. That one is lower than the FIFO because, okay, so you value it at a bigger, I don't want to say, it is a bigger cost price. That one you value at average price. And remember, the average price was 2,700 Rand. Because the closing stock is bigger, that one will be smaller. Because remember, if I go back to the calculation of the cost of sales, you add everything, then you minus the bigger closing stock here, and you minus the smaller closing stock there. And the answer was 445,530. So that one is now bigger than the FIFO method. And because you minus a bigger amount from your sales, that one is smaller again, and that one is bigger again. I didn't say it will happen the whole time, but this is typical because the closing stock in the FIFO method was valued at a bigger cost price. There's just two questions left. The one is, the owner thinks that changing to the weighted average method will lessen her tax burden. She approached you for advice. Provide 2 points of advice in this regard. It is unethical, okay? You cannot change to the weighted average for whatever reason. It's unethical, okay? There is the answer. Let me just make it bigger for you. It is true. It will for a while reduce the tax liability as the gross profit using weighted average is smaller than when using FIFO, but it is not permissible. It is unethical. It's unethical to manipulate stock valuation methods. To change would affect comparisons over financial years. meaning that you use FIFO for a long time, and now you change to weighted average, then you cannot compare it to last year's figures. But please, it's unethical. You're not allowed to change from one. If you want to change from one method to the other one, you must have permission from SARS, and then you must also mention it in your financial statements. You can change once, then final, but it is unethical to manipulate your stock valuation methods. It's unethical to change just because your gross profit is lower. Remember, your gross profit is now lower. That will make your net profit lower. And then you times a certain percentage of your net profit is your tax. So you will pay less tax. That is true, but it's unethical, and it's not permissible to do that. Grade 12s, thank you very much. I really hope that you learned something today. Like I said, it's two very, very interesting chapters, interesting work. Make sure that you understand it so that you can do well in these two questions. And I wish you well, and I will see you next time. Bye-bye.